stock market and the real estate market is not correlated, right? So there's no correlation between the stock market and the real estate market. But it's interesting, though, how you see the stock market and what it does for investors and the fear they put in. But I think the stock market right now is just going through a needed correction. We have the obviously the Dow Jones Industrial Average hit 35,000, bounced right off the top of it. And then we have the Nasdaq was all-time highs. Earnings came out with Apple and Facebook and Amazon and Tesla, and the market obviously came down from that. But it's a needed due, and this is a minor correction of what I believe is going to happen in the future when these foreclosure actually are hit the market, and they call it the default tsunami. And I've talked about the default tsunami, a part of the Remote Millions course, which you guys might have been involved in, or may have purchased the course. But so when you look at it right now, and you look at the real estate market and you look at the numbers, and I'm checking out inventory numbers, consistently of what's going on. So currently we have about 469,000 units of inventory nationally. Currently here in Phoenix, we have roughly about 3,000 units on the market, only 3,000. Right now in Phoenix, we have people lining up to basically buy houses. They have to fill out a form so they can get a lottery for a house, and new houses that are being built. So we're literally back to where we were when it came to demand in 2005. 2005, I was a wholesaler. In 2005, I was about 2 years in the business. And at the inventory in 2005 was roughly, I don't know, I think there was like 4,800 units in July of 2005. Now, inventory as real estate investors is the most important thing that you can watch and follow. Inventory. When we have decreased inventory, what happens is you have prices, you have demand, it becomes a seller's market, and prices escalate. When you have a significant amount of inventory, then what happens is prices collapse. So here's the difference between now and 2008. 2008, in 2006, 2007, right, we started to add on inventory into the market. And we started right in about 2006, 2007, at about 6.8 months supply in the marketplace. Then when 2008 hit, we rose from 6.8 months supply to about 12.2 or 12.3 months supply of inventory. So we increased from literally from 6 to 12. We doubled, but we had about 12, a little over 12 months supply. So now you got 12 months supply, and where are we sitting now? We are sitting less than 1 month supply of inventory currently right now. I think we're about 6 or 7 months of supply. I mean, not my fault, less than a month of supply. I think we're in weeks of supply right now, and which is unheard of. It's the lowest in history. So if you look at it, and then you see all the properties that could potentially hit the market. And so if you look at the numbers, we have roughly 6 million people right now that have not paid their mortgage, right? They're 30, 60, 90 days late on their mortgage, over 6 million people. We have another close to 3 million people that are in forbearance. So they have went to their banks and they requested forbearance. So now you've got close to 8 to 9 million people in the marketplace that either A, haven't paid their mortgage, or B, that are in a forbearance program, 8 to 9 million. Now, what's going to happen with these properties? What's going to happen with this situation? Well, the government, they want to stimulate the way out of it. They want to find a way to get out of millions and millions of properties all of a sudden flooding the market in this, what we call this default tsunami, that I'm projecting, or people are projecting. So what they've recently come out with is new a new potential program, and they've are basically tapping the servicers on the shoulder and requesting the government to kind of force the hand of the servicers. And these are mortgage servicing companies. These are all the companies that manage all the payments for these large mortgage companies. And what they're saying is this: they're saying, hey, we would like to propose 3 things that we'd like to do to be able to reduce the amount of this default tsunami that's potentially going to hit the market. There's 3 things that they want to do. The first thing they want to do is they want to give borrowers more time, which means they want to change the time frame of when they're going to lift the forbearance from June, which is coming up here in June, to the end of December 31, 2021. So they want to give people more time where they can go get a job, where they can potentially make up their back payments, where they could find a way to make up these back payments. Now, remember, we've got 8 to 9 million people in this distressed bubble that we're looking at that could potentially make a massive impact of inventory hitting the market. So now what they want to do is the 3 things. They want to give them more time, number 1. Number 2, what they want to do is they want to do what's called a loan modification on their mortgage. And now this loan modification is essentially going to give them 40 years to be able to pay back. So they're going to modify their loan to 40 years and take the back payments and put it in and modify it into this 40-year loan. The issue is number 1, they have to apply for it. Number 2, they're going to have to show some sort of COVID distress. And number 3, they got to qualify for it, right? So they got to apply for it, they got to show distress, and they got to qualify for it. So now you've got these 8 million people that are in this potential situation that now could go through this forbearance, but but they have to go through steps to be able to make this happen. You know what the third thing is? The third thing, their suggestion to stop this default tsunami is we've got to communicate with the borrowers. We have to be able to communicate with them. So that's their big idea: modify, give them more time, and communicate. That's what they believe is going to potentially help us stop this default tsunami. So let's look at the numbers, right? So we've got roughly 8 to 9 million, this bucket, this 8 to 9 million people that are in this situation where they haven't paid their mortgage or they are in this forbearance with their bank. Now, let's say December 31. Let's say we extend it, we push back June, which I think they'll do, and they'll give us more time or give people more time until December of 2021, right? Which is good for us. Right? We're in a screaming market right now. We're selling properties left and right. We're literally putting properties out to the market right now, and they're just flying off the shelf, which is amazing. And this is a great time. Between now and between December 31 is a great time to make as much money as possible wholesaling houses and stash your cash. Stash your cash. Because there is going to be an opportunity like no other that's going to come during this default tsunami, and how we operate during this default tsunami when it happens, and if it happens, which I believe it will. There's a different way to operate, and there's going to be a different opportunity for us to generate even more significant. I'm talking windfall type of profits. I'm talking about generational type of wealth type of stuff. So here's the deal: is that between now and the end, right? December 31, the market's going to continue. It's still going to be heated up. Interest rates, they're going to keep low, although they're hinting of interest rates. Inflation rates, called the CPI, just came out today, the core consumer price index, and that shows the inflation. It reached literally highs of back in 2006, pre-pandemic or pre-2008, the Great Recession that happened in 2006, 7, and 8. Prior to that, we hit inflation rates that high. And the reason we hit inflation is because you pour a bunch of money into the marketplace, then what happens is your money doesn't go as far and you create inflation. So inflation jumped when the CPI was reported today at 5:30 this morning, East Coast time, and that number jumped dramatically. And what happens is it pulled a trigger in the market today, and you saw a sell-off. Dow was down over 600 points, Nasdaq was down over 350 points, and the market sold off like crazy today, which is amazing. So now remember, when things happen like that, and when there's shakeups in the market, money's to be made. You know, you can if you position yourself correctly, there is money to be made in the markets today, and in the markets, right? So, and the same thing happens with real estate. So here's the thing. So between now and the end, and what the government, you know, is going to do, and if we're looking at these potential numbers, what is the potential magnitude of what could hit the market if we were going to put an assumption on it? So we got December 31st, 2021. What happens in the first quarter of 2022? Well, let's just talk about it. Let's see what happens, right? So we've got 8 million. How many people do you think, right? How many people do you think will actually get approval for this forbearance for this modification to approve this 40-year mortgage out of, say, 8 million people, right? Let's say, how many people, if you're going to put a number on it, if you're going to guess, right, what do you believe the number is? So I asked this question at an event this past, what was it, Friday. There's about 800 people in the room, and I was speaking at the event, and I asked the same question. Most people were in the 20 percentile range, right? 20%. Yeah, we got Christopher saying, yeah, 10%, right? So you're right, exactly. Most people are in the 20%, maybe 20%. That means 80% of the people aren't going to qualify. They aren't going to go through the steps. They're trying to get, you know, this forbearance, and they're going to attempt to do what? Sell their house. So what I proposed is this. I proposed, what if theoretically 8 million people, let's say 80%, not 20, not 10, but 80% actually are able to, you know, go through this loan modification and be able to find a way. 80% successfully are able to make their back payments and find a way and modify out of the 80%. That leaves 20% left over. 20% of 8 million is what? You know, we're talking 1.6 million people, 1.6 million. So now, how much inventory do we have in the market? We talked about it earlier. 469,000 units. 469,000 units are in the market right now nationally. 469,000. So if in the first quarter of 2022, there are 1.5 million properties that hit the market, what will that do to our real estate market? Now remember, inventory, we are at historic lows. We're under a month's supply of inventory. So what's going to happen? Now we're going to what? Well, almost quadruple the amount of inventory that we have in the market. And what is that going to do for real estate? So think about this. You can't get modified, and let's say the number is, you know, 1.5 million. Put a number, and that's being incredibly not aggressive, incredibly conservative, right? Conservative. Let's say 1.5 million properties hit the market. These people are going to sell their properties. Now, here's the interesting thing. When someone is in foreclosure, what is different than when someone right now calls you to sell their house? What is the compelling difference between someone right now, let's say they're in distress, they're financial distress and they need money, and then someone's in foreclosure? What's the biggest difference between those two? If someone calls you today and they're in distress and they need money or something like that, right? There's not an impending event. An impending event is where something has to happen by a certain date. That creates tension, that creates pressure, and that creates urgency within the transaction. So here's what happens when a foreclosure statement is issued, which will happen after December 31, 2021, and in this first quarter. What happens is there'll be all these foreclosure notices that will go out to these homeowners, and they're going to have on there what's called an auction date. And that auction date, depending on the state that they're in, is going to be anywhere from 60 to 90 days to cure that mortgage. So they're going to be given an opportunity to do a forbearance, right? Not forbearance, but do a loan modification. They're going to tell them it's coming. They're going to communicate with them that it's coming. And then what happens is there's going to be a point where these banks are going to have to recoup the money and be able to do something, right? Be able to take the asset back. They're going to mail all these foreclosure notices, and then the foreclosure notice is going to have the amount owed in back taxes. And remember, we're talking about from March of 2020. So this time it's almost a year and a half, almost 2 years, whatever it is. So 2022 is almost a 2-year period. So you got 2 years of back payments on a mortgage. Someone has $1,000 a month, that's $24,000 a year they're going to have to come up with just to get their mortgage current, not including back interest and payments and attorney fees and stuff like that. So now they have these foreclosures, and we have a foreclosure. What's important about the foreclosure notice is that on the foreclosure notice, you have the amount you got to bring current, and there's a date, an impending event, a date that the foreclosure has to be handled by, or it's going to go to auction, right? So they have to make the payments current, or the house is going to go to auction. So what are people going to do? They're going to have a couple different choices. They're going to borrow the money to try to pay off the $24,000. They're typically going to borrow it at a high rate, right? So they're going to try to get second mortgages and borrow from friends, whatever it might be. Number two, they're going to list their property, and they're going to try to list the property in the market. Now, they're going to list it, so there's going to be a lot of inventory that's going to hit the market all in once in this first quarter, second quarter of 2022. There's going to be a lot of inventory that hits the market. Now, what happens is when you have a lot of inventory that hits the market, it's going to slow the pricing down, and there's going to be a lot of opportunities on the market for now buyers that are looking. So if you're looking to buy a house, you have friends that want to buy a house, tell them to be patient. There's going to be an incredible opportunity for you or anybody else that's looking to buy a house to wait until this happens. And there's going to be a ton of properties to kind of pick and choose from because there's so much inventory that's going to hit the market. Now, the interesting thing, we're still going to have demand. We're still going to have, essentially, they might fluctuate interest rates a little bit, but we're still going to have low rate interest rates environment. But the bottom line is that there's going to be a massive, crazy opportunity for properties. The second thing they're going to do, other than list, is they're going to call you. They have to sell their properties. They're going to call you. That means right now, between where we are right now and the end of the year, you got to get your stuff together. You got to start cranking. You got to get your mailers going. You got to get your AdWords set up. You got to get proficient on doing deals in doing this. So the goal is to get incredibly good and make as much money as possible, stash it, because what's going to happen, and I believe in the first quarter, or when they eventually lift this moratorium, which is supposed to be at the end of December 2021, in the first quarter, what's going to happen is there's going to be an influx of properties, and your phone is going to melt. Your direct mail is going to ring off the hook, and they're going to be looking to sell, and they're going to have a pending event. They're going to have urgency to sell and get the deal done and get it done now.